Good evening. This is the Elliott Wave update for the NASDAQ 100 and the S&P 500 for Wednesday, October 26th, 2022. Wild and crazy day. It has been ever since we started this second wave, but it just continues and the hits just keep on coming. So let's kind of dive right in. I'm going to start here on the hourly chart in the NASDAQ. I had left it yesterday that we had completed wave 1, 2, and 3, looking like we were going to do a 4. We did put in a 4, and it reached a new low during Globex this morning. And then I stuck a 4 right there. I was going to put 4 here, thinking we're going to zip up in a 5, came back down, put in a new low, stuck the 4 there. It raced up. I mean, I could leave the 4 here, and then that would be a 3-wave to really stay in tune with, in fact, I'm going to do that now that I see it. Due to the fact that we were in a triangle, a diagonal, to finish this C wave. So C wave diagonal up, and it failed. That's the important message that I wanted to bring. It failed in the NASDAQ. The S&P did make a new high, and it also looks to have completed, but I'll get to that in a minute. So in the NASDAQ, it failed. That's a big message. Didn't fail by a lot. Failed by about, I think it got to 17. How high did it get? 17 or 703. Yesterday's high was 734. So it failed by 29 points. And what's that in the NASDAQ? Pretty much nothing, to be honest with you. So the immediate reaction off of that high was pretty strong. Again, on the 1 hour. Let's drop down quickly, go to the 15-minute, and you're going to see it. Just kind of zip it. And we've already broken below the low, the earlier low of, I'm going to include the 4 here. And even though that was just a weird little irregular, and then we're going to zip back up, I'm going to leave it right there. If anything, I'm going to put the 4 over here if I have to be totally compliant. And that's what I'll do. But we still came down and broke below. So that pretty much cleans up this wave 2 for me. Now, having said that, I want you to understand that even though I don't think that the market's going to be really gathering enough energy based on Apple and Amazon's earnings tomorrow, where Amazon continues to drop, Apple traded now and closed below 150 after racing itself up to 155. So we're getting some signs. And we can't forget that Apple actually warned about a month ago about what it looked like going into the earnings and how inflation was affecting the company. And that then they released iPhone 14. And then we hear reports that they have pulled back on production because the sales weren't as robust. Now, there was somebody out there who talked about that Apple, oh, no, it's very, very robust. They're going to show the record breaker, blah, blah, blah. That could still be. But I prefer to listen to the company versus a pundit out there in the financial media world. So here we sit. Here we sit. And so what it does, first of all, the failure of the C wave to get above, or wave 5, we can start there, to get above wave 3, does produce a negative picture. It followed through on that negative picture. Let me drop down to that 5-minute. Let's take a peek. It's not pretty. So what we got going on here is a big dump, a rally and another dump, and a rally, and then this was Facebook's, Metaverse's earnings. They first came out and somebody pushed that buy button in Meta and ran the stock to 142. And the next thing was they ran it down to 117. And right now it is 140.52 bid, 140.03 bid. It's like they're all over the board. They're all over the board on this thing, but it's trading down as low as 114. So, but a couple of things came in and balanced it out. So far we've got a low at 415, 11,415. And that was right after, Meta kind of just dove lower. So we still have a lot of other things coming out right now that are kind of balancing out things here in the NASDAQ. I truly am not suspecting something in the Dow. They're pushing the Dow right now. You can see after hours, the Dow is now up 89. The Russell stayed higher all day. So again, we're going to get this very volatile market activity, but I'm now more considering that at least here in the NASDAQ, we've reached the top of wave 2. I will leave an outside possibility that tomorrow they will again attempt to run this thing, and they're going to have to run it back above 11,700, and they're going to have to run it now above 11,740, and they're going to have to run it up towards those upper levels that we have, which are above 11,800, 900, and 12,000. Now, you tell me, that's a 600-point rally based on basically we got 2 big boys left to report. And that would be the ticket. AMD being bid up after. They don't report until next week. But there must have been somebody that came out and said something about chips, because everybody's kind of getting bid up in the chip making world. Even NVIDIA. Look at this. It's kind of crazy. So I'm not really sure what the deal was within that, but that's what they're doing. And that's kind of keeping us right here. So we continue to have this very crazy, volatile, very, very volatile market. And so we got to stay on our toes. The moves were fast, furious, particularly this afternoon as we were getting into the close. I'm talking about swings of $30 to $40 within a minute to 2 minutes. That's volatile. That can either make your day or break your day. So what can we expect for tomorrow? Well, on my 5-minute, I'm now counting 5 down. This one, I'm not even, that's an extreme, and I'm not even going to take a guess at where that would fit, because it fits nowhere. But anyway, what we have is possibly 1, 2, 3, maybe, all very ugly. But either this or it's 1, 2, and this is 3, 4, and now we got this crazy S5, and maybe that's where this first minute wave 1 of minor wave 1 of intermediate wave 3 is now coming in. Get a little bit of a bounce again without really taking a peek, but I can quickly throw up just so we have something. But you're going to have to make adjustments depending on where this all ends up overnight to where we get started. If they come down and produce new lows, then this has to move. But just saying that this all holds, and this is indeed minute 1, we should get a wave 2. And guess where it comes in? Right where the top of where they just tried to take it on the first release. So that would be 11,525. But a wave 2, as we know, can go to 50 to 62%. So we actually could get back up towards 11,593 to 11,600 in another second wave. So we got to continue just to keep our count solid, our count good, take a look at where the fibs could be, and then play it. Now, if this is the completion point for that small minute wave 1, then we're looking for an ABC. ABC up. And that would be, a 3-wave rally versus 5 waves down, right? So these were all 3 waves. And so being that this ended up being a pretty clean, that was A, B, and then we got 1, 2, 3, 4, 5. So it all works out. It all fits. And I probably could move that form, put it back over here. But I'm going to leave it alone for right now. In any case, I do think that we're pushing towards a rally, a little bit, just a recovery, a relief, a wave 2 rally. If not, then we're likely going to slip and make additional lows. And before that, I'm going to take this off. Now, what do I need to look at? Because I now want to start looking at downside targets, right? If this is wave 2 and there's wave 1, I got to take it out to my 4-hour chart. Okay, so let me open this up, because what I'm looking for is that third wave, and I got to start here. I actually want to use my extensions, and I'm going to put it there, to there, to there. And what we got, first support, and by any means it's just support to take a breather, is 10,965. Then we have 10,490. Then we have 10,106, and then we start to break sub 10,000. Now, where can wave 3 get us to? I hate to say it. We're looking pretty low. At the third wave, longest and the strongest, that's what we're looking at. But to be honest with you, anything below this, 84.78, based on these numbers right here, unless that changes, that wave 3 would be equal to wave 1 at 84.78. Since I'm looking for it to be the longest and the strongest, and particularly because it's a little bit higher degree, it's an intermediate degree, that brings us down to 77, 72, and 64. So it could get real ugly. It could get very, very ugly. I know a lot of people don't want to look at it. I'm sure a lot of people are still going to try to hold on to the Fed is going to pivot. And we saw a big burst higher early this morning, and we was like, well, what was that? And it truly was that the Central Bank of Canada said they will ease back a little bit. I don't know why somebody would decide that that meant that the US central bank was going to do the same thing. And in no way. I don't think Canada is in the same position. Yes, they're seeing inflation. Yes, all of that fits, but they're not in the same fiscal position that the United States is in by any means. So why would I consider their central bank saying we're going to ease back a little bit on our interest rate, hiking them as much, would then convert over to the Fed's going to do the same thing. The Fed would be in a very, very bad position if they did that. Seriously, they would be in a bad position. There's way, way, way too much money out there amongst the world, US dollars. They've got to take that money out of hands. And the only way they can do it is to raise the interest rate so that we can't borrow it. It costs more to borrow. Again, I'm going to tell you the stalwart way that the Fed has dealt with runaway inflation. And if you don't want to call it runaway or just high inflation, and how you bring that back under control and defeat it, is you have to raise the interest rates above the rate of inflation. We're not even close. We're just now cresting 4% in Fed funds. Last I checked, inflation is closer to 9%. So what's it tell us about what the interest rates need to do? So this whole concept of the Fed's going to pivot does not make sense when you look at the facts, when you look at the reality of the situation. Enough there. Okay, so back to the NASDAQ. We'd still be looking for this thing to get started. We will get additional confirmation on an hourly basis. We're already breaking below the 50s. What's up next? The 200s. The 200s. So we could really start to slide. For whatever the reason is, they're buying. They're buying something in the NASDAQ. And I'll take a quick look. I know you guys can't see this, but just give me a second. I'm buying something in the Dow, I mean. Let me go figure out what they're buying up in the Dow after hours. And I don't really see anything, to be honest with you. Either that or they're not actually putting it in just now. So I'm not sure why they're doing what they're doing. But they're liking something in the Dow. All right. So let's go over to the S&P and take a look at what we got going on over there. S&P very beautifully went up and got to 38.97. And this really was resistance just below 3,900, with next resistance being just above 3,900 at 39.18. Smacked it, hit it, turned lower, and dropped like a stone. So we're getting some good confirmation that that indeed was the case, right? So diagonal kind of did come in, got to the top of the channel, didn't break it, died. So I am also here in the S&P putting a wave 5, the C wave, and the intermediate wave 2. Pulling it back out to a little bit larger picture, what does that tell us? Here we got intermediate wave 1. Here we have intermediate wave 2. What's our expectation? Is that we're going to start to drop. So once again, I'm going to put on our extensions that cover us for intermediate wave 3. Back this back down to the hourly chart so we can start to see it. Here's our first one. Our first hint of where we can take a pause and catch our breath, 37.02. Then we have 35.82. Then we have 34.85, 33.90, 33.15. Again, absolute requirement of an intermediate third wave. It's got to break that low, which is 35.02. We have support just below it. So they're going to get there, give everybody a head fake and stop right there. Everybody think, oh, we got to rally. Then we have 33.87, 33.15, 32.48. Wave 3 would be equal to 1 at 3,072. Pretty much 780 points from where we are. We got some downside to be putting in here. Why they're continuing to hang on, they do, they don't. It's not up to me. So what could cause that? We all know. Pick from this massive amount of information that we have to choose. So not a pretty picture. What we can start to look for, though, and I'm going to drop this real quick and let's bring it down at least to the 15 so we can see inside this thing now. Pretty good. 15-minute chart kind of shows that likely we had a 1, 2, and that's a 3 to 4 to 5. So it did a minute wave 1 possibly. ABC, we don't know if the C is done yet, because they're starting to push back up towards that high 55. They're above the body of these two bars, previous bars. So I would say that we've got a little bit more to go. But let's take a peek. Let's put up some resistance. And by the way, the S&P making that new high, while the NASDAQ did not. Here's our resistance coming back up, 38.59, 38.67. And we can get on, if it's a wave 2, we got potential to get back up to 38.75. And then nosedive. So a lot of false illusions are going to be going on here. We got a lot of stuff coming in, and that's still yet to be reported. But the last two major tech titans are Apple and Amazon, and they come tomorrow along with Intel. And Intel is still a tech titan. It's a huge company. Doesn't get all the glory that some of the others do, but it's still up there. So they report also tomorrow. I'm going to be looking for a little bit of a rally, and then I would be expecting that they're going to turn it lower. Of course, the street, I don't think, is really expecting Apple to disappoint quite so largely, but I don't think they were expecting Meta to report the way that they did. So we're pushing this higher, and they're now Metaverse is trading at 112. 88. 112.88. So there is a mass exodus out of metaverse. And so now the companies, it was down, I think, 61% off its high. And that was the other day. Now it's what? Another 9% maybe. In any case, here again, we've also on the 15-minute, we got flat 50 and 20. So it's going to hang out here, maybe push a little higher. But our next step really is to come down. If we start to break below the 200 on the 15-minute basis, run out to the 30 and take a peek. We got nothing, right? The 50s are right here. We've already broken them. We zip back above them on the 30-minute chart. Same deal, the 200. Let's take a peek at the 60-minute chart. We got the 50s, got close. They're sitting at 38.27 approximately. So we got 31 to 27 right there. A break there, boom. We've got price support, you can say, but the next moving average support would come in at 37.55 to 37.37. And then our first fib support is at 37.02. So that's our picture for today. It was not an easy trading day. Very, very sloppy morning, very choppy. NASDAQ all over the board. The S&P, not really sure. I mean, these moves look okay. They look great. But if you were within them, you really had to have the foresight to just hold it, because there was a lot of down, up, down, up, down, up, and didn't make it all that easy to trade. Tomorrow, I don't know if it'll be any better or any worse. We are now kind of beginning to realize that we might be falling back into trend. The trend remains down, by the way. So all of these are counter trend rallies. Even this wave 2 would be a counter trend rally, not the bigger, the smaller. The minute wave 2 would be a counter trend rally. It's an ABC. We're counting 5 waves moving to the downside now, 3 waves going up, and then we'll look for another 5 down. Okay, I'm going to leave it right there. Again, tomorrow on the economic front, a lot bigger numbers, let's say. We have tomorrow durable goods, GDP, and jobless claims, all pre-market. It could set the tone, and all kinds of things are going to go on. We're getting there. We're now confronting the truth and putting to rest a lot of the pundit talk. So that's going to be it for today. Next update will be on Thursday, the 27th.